Morning, Steve Freed in Chicago with the morning grain comments. We have a mixed trade overnight with beans higher, corn unchanged, and wheat has now worked itself higher. Stocks are higher, the dollar is lower, crude's higher, and gold's higher. In the crude market, I think we're watching this Hurricane Sally as it comes into the U.S. Gulf and the impact it might have on crude oil production. We'll be watching also see if this slows down the Delta harvest, and as it moves to the southeast part of the United States, does it impact quality of the cotton crop or peanut crop? As far as the 2-week weather forecast, still looks to be mostly dry across the Midwest. Temperatures are below normal now, but eventually work to normal to above next week. The overnight maps had put a rain event, a pretty significant rain event, in the last few days of September across parts of the Midwest, the southern plains, the Delta, and the southeast. This morning's maps are not as aggressive. So October, to me, looks something similar to what we've seen the last few weeks, which should be just normal temps and maybe normal to a little bit below normal rainfall, which should be good for harvest. As far as November is concerned, we're still looking at maybe at a wetter pattern across the Midwest. Individually, the soybean market continues to be trading close to $10 because of China buying. I think most analysts feel that, number one, prices are too high, and number two, funds are too long going into harvest. But as long as China keeps buying U.S. beans, the market will be supported. Once they switch to South America, though, I think the market is due for a correction. As far as the corn market is concerned, again, the market is seeing very little farmers selling. Harvest is delayed a little bit, but as the farmers get into the fields, I think they'll start selling some cash, especially if their yield's a little bit better than what they thought. And again, there's a big unknown as how much corn China will buy. Some USDA says they'll import 7 million tons this year. Most commercials feel, at least in 2020, they'll take maybe 20 million tons of total imports, and in 2021, maybe as high as 30 million tons. And so that could be the difference between 320 corn and 380 corn on the December. And same thing about beans. How many beans do they take from U.S.? Once they stop, beans could trade down to $9.25. But if they keep buying, we could trade as high as $10.25. Over in the wheat, dry weather in Europe, Russia, Argentina, and Western Australia has pushed wheat prices to close to $5.50 nearby Chicago and $5 nearby Kansas City. We backed off a little bit in those prices. Yesterday we saw new crop Russian prices dip a little bit, and we do see a little bit of a pickup in export demand, but again, COVID-related demand might be down in world wheat trade, and so we still have record stocks, which suggests that wheat prices are overbought. And so we're just 48 days away from the U.S. election, and it's still a close race. And there could be some gyrations in markets depending upon the outcome. We're also noticed that the WTO ruled against U.S. as far as the China tariffs are concerned. And so we'll see if that sours the relationship in the U.S. and China, and if that has any impact on their phase one trade buy. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always try to treat people like you yourself would like to be treated.